If two business owners walked into my office right now, identical businesses, identical revenue, and identical credit scores, but one owned a home and the other didn't, the homeowner might have a distinctive advantage. It's not because homeownership guarantees approvals, but it can weigh significantly by telling a much broader financial picture. So after 15 years as a bank, I want to give you the context as to why. So again, when you go into your lending request going forward, you'll have an additional tool in your tool belt to help improve your odds and get you higher limit approvals as well. I'm JP. I'm going to be your business banker and capital strategist. Welcome to the invitation. So this video is actually inspired by a conference that I'm currently at the time of this recording in Las Vegas, the national conference for the National Association of Real Estate Brokers called NAREB. You can look it up, Google it. I might put some links in the description down below, but I wanted you to be aware of where this was motivated from. Of course, the channel is all about content to help you as entrepreneurs and business owners get all of the insider information from an actual business banker on how to improve your odds of becoming bankable and lendable to get access to the resources you need to live out your vision as a business owner, successful, well-funded business owner. That having been said, I'm at a conference, a very large national conference that is filled with business owners, entrepreneurs, real estate professionals, and homeowners. We're having very in-depth conversations, a lot of guest speakers talking about really in-depth topics of closing the wealth gap, accessing capital, and other major financial and economic topics, even legislation around, the same things we're covering on this channel, which we're all attacking the wealth gap from different angles, right? So this video, I don't want to ramble too much, but I do want to give some context as to what's been going on. This video is also a bit of a catch-up video because I missed my normal Monday scheduling due to being maxed out here at the conference. So I'm going to be giving you guys a couple videos in succession, just going over things that I've picked up that are of value to you as entrepreneurs that will put you in a better position for funding, being bankable, and maybe even a little bit about legacy. Now that I've rambled a little bit about that, let's talk about this. What are the distinct advantages of you being a homeowner when applying for business funding and business capital? So number one, right out of the gate, homeownership is a signal of financial stability. This is very important, all right? This was talked about a lot at the conference. So buying a home usually means you've already demonstrated stable income, ability to manage debt, saving for a down payment in many cases, or at least some kind of cash to close, consistent payment history, and long-term financial planning. These are qualities lenders are looking for. They like to see it. You have to remember, generally speaking, with the exception of certain loan products and programs, you need 2 stable years of employment, 2 stable years of financials, 2 stable years of tax returns. You need to be in the same working industry for at least 2 years, etc. You really have to be in a pretty decent position, mostly from a consistency point of view, in order to qualify for most home loan products and programs. That having been said, these are the same indicators of stability that lenders are looking for when approving you for business lending requests. When you're looking to get funding, same type of ordeal, different context. And I'm going to get into that a little bit further because the real estate side has a little bit easier. There's a hard asset right there that can hold value relatively well. So a little distinction from business lending requests, but for that same reason can be a great asset for you when applying for business lending requests. All right. So the next part of this is going to be, it's about the entire financial picture when we start looking at quality business lending requests. All right. Banks just don't lend to businesses. They lend to business owners, especially if you are not some upper 7-figure, 8-figure, long-standing revenue generating business. You are likely personally guaranteeing, you're likely one of the only owners or one of a couple owners. The bank is lending to the entire business and the business owner in that scenario. When reviewing applications, lenders often evaluate personal credit, income, net worth, assets, liabilities, cash flow, overall financial strengths. Your home can strengthen the overall picture. So keep that in mind. The next is going to be another sleeper that got talked about quite a bit as well. Some of the more prominent people at this conference talked about how they were able to get businesses off the ground and push themselves to higher levels on the socioeconomic chain because of home ownership and the equity in their home. So home equity can become in itself a business capital tool. So as equity grows, it may create, future financing options depending on your circumstances and the lender. All right. So an example includes home equity loans, home equity lines of credit, and cash out refinances. All tools designed to be able to get equity out of the home, but all different terms on how you have to pay them back and how you can use them. Okay. So these products involve risk and should be considered carefully, but they can provide capital for qualified borrowers. And this is a great place to borrow from, because if you can qualify for it, then you're likely going to get very favorable mortgage-like terms and interest rates on this debt. When you think about getting business funding, a lot of times it's closer to the unsecured range, or it's just not as stable as borrowing against real estate, a tangible fixed piece of property. So the terms are a bit bumpier or a bit more expensive than it would be in real estate. So you using your home as reserves, as actual capital, this is a phenomenal opportunity for you to potentially fund your business from a responsible borrowing source, right? It's a great source to pull from. So why banks view homeowners differently? Owning a home may demonstrate commitment, stability, financial maturity, asset accumulation, and wealth building habits. These factors can contribute to a stronger overall lending profile. All right. Why does this matter for entrepreneurs? This is where it comes in for you. One of the biggest messages I can leave is that becoming bankable starts long before you apply. You will hear that constantly on this channel because it is so important. Every financial decision adds to your overall profile. Home ownership is often one of those building blocks, one of the biggest and most formidable building block that can help you establish yourself in the eyes of financial institutions. Once you own a home, you've crossed a certain barrier of socioeconomic status. And it can be a great financial tool, and it can also be very financially symbolic, okay? So I don't encourage entrepreneurs to buy a home just to qualify for a loan. Let me be abundantly clear about that. So I encourage them to the building assets strengthens your financial foundation. That's the moral of the story, all right? And stronger financial foundations often lead to better opportunities when it comes to access to capital. So if you're serious about becoming fundable and not just getting one approval, I want you to subscribe to the channel. Stay locked in and tapped in with me. You can get to the About section. I always encourage, get to the About section of the channel to learn more about me as a professional with 15 plus years of experience across the financial services and banking space, but I specialize in business banking and entrepreneurs. I also want you to like, comment, share, subscribe, support the channel so the channel can continue to support you. I want those who stuck around this far to put financial foundation in the comment section down below. Let me know you got the value and you got what I was putting down in this video around how having the right assets behind you can make you more lendable, getting you the capital that you need to fuel your business. So you can go out there and contribute to the economy, contribute to your community, and establish a financial legacy. A lot of times, the pioneering a financial legacy for yourself and your family. So put financial foundation down below so I can make sure that you stay tapped in for a relatively short, but as always, jam-packed video. Other than that, again, getting the About section, the channel was completely named and derived from my book that I wrote, my first self-published book, The Invitation. Get in the description section down below to tap in more about the NAREB conference, but also get in the description down below to tap in with my book. That book has already gotten some really respectable reviews from some very respectable people in the financial and lending space who are unpaid and completely disconnected from me. There's some great insights for you as business owners, entrepreneurs, and helping you understand the financial system, the banking system, and to help demystify or start to heal long-standing traumas and history and issues around building relationships with banks. Because honestly, that's one of the biggest barriers that I see from business owners, entrepreneurs, communities, and households in getting access to the resources needed to accomplish their financial goals. Nobody wants to work with or connect with the bank for valid and understandable reasons. My book dives pretty deep and at least getting those initial layers of clutter out of the way, tension, friction, and apprehension out of the way so you can build effective relationships and get access to the capital that you need. But other than that, I want each and every one of you to stay focused, stay in motion, and I'll see y'all soon.